Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. So glad you're here. What do we got going on? Well, we got a big week ahead of us, right? We got a big election coming up. Very exciting. Not to be overshadowed, we got the Fed interest rate announcement. Big week, big week. Very exciting. So what's been going on? Well, we had 5 straight up months in the markets, right? 5 straight up months. But October, the markets finished down. First down month. Okay, 5 straight up, 1 down. We'll see how this plays out. Now, I'm betting that the market's going to come in. I'm betting that I have a short position on the QQQs, and I think the market's going to come down. We'll see if that plays out or not, but that's just my take. That's just the way I'm playing it. But a lot of people think this market's going to continue to run. It's going to continue to go higher and higher and higher with no end in sight. Well, things don't go straight up. Nothing goes straight up. Even my gold doesn't go straight up. Now, here's the thing. I want to comment on a gentleman that made a comment the other video, right? Now, he's saying that I'm just talking my book, right? I'm just talking gold. He's saying if gold's going to go up, houses are going to go up with it. Now, it's possible that they both go up. Yes, that's absolutely possible. But here's my take. And let me tell you why. Now, in the last video, I started to tell this story, but then I got distracted. It's telling a story within a story, and coming back to the original story is actually an art form, and I'm not that good at it. I get distracted on the other story, and I forget to come back to the story. But the story was in 2008. What happened? 2008, great financial crisis, right? Houses went down by 34%. 34% decline in houses from 2008 to 2012. Took 4 years for it to bottom, right? Okay, that was down 34%. What did gold do? Let me think. Oh, gold doubled. Yeah, that's what it did. So a house is down 34% and gold doubled. Now, why did gold double? You see what happened in 2008. 2008 is where the Fed pivoted. Throughout the course of history, every time the Fed pivots, gold tends to double in price. What just happened recently? The Fed pivoted, right? They dropped interest rates by 50 basis points. That's called the Fed pivot. They were raising them, and then they dropped them by 50 basis points. That's the pivot. That's where you want to be in gold, because gold's going to double. Now, I'm just going to use rough numbers. I know gold's over 2,700, but let's call it 2,500. Okay, 2,500, so gold's going to go to 5,000. It's going to double because the Fed pivoted, right? When the Fed pivots, gold doubles. That's basically what happens, right? Now, here's the thing. When the Fed pivoted, they lowered rates by 50 basis points. What happened to mortgages? Oh, interesting. Mortgages went up by 50 basis points. See, the Fed controls the short end of the curve, but the long end of the curve it doesn't control. Why did mortgage rates go up? Let me think. When the Fed pivoted and lowered them, they can smell the inflation. Can you smell that inflation in the air? Well, there is some inflation going on still. They didn't kill inflation. They're waving the white flag, right? They lowered rates, causing inflation. Nobody's going to give you money for 30 years at 7%, so the rates went up. They're 7.4 now. Okay, so rates go up. You get a few more of these Fed cuts, you're going to push mortgage rates above 10%. You're also going to push inflation above 10%. The Fed doesn't understand this. Actually, they do understand this, and this kind of bothers me. It bothers me that the Fed knows what they're doing. The Fed knows what they're doing because they have to do it. Why? Because the banks won't survive. Because our government won't survive. Our government needs rates to drop down to 0%. But what's inflation going to do? 10, 20, 30%. We may go into hyperinflation. But the thing is that houses came down 34% in 2008. Gold doubled. Okay, we just got the Fed pivot. I'm expecting gold to double again, and I am expecting houses to drop. Now, how could they keep houses up? Well, the Fed could come out and say, all mortgages are going to be 1%. We're going to buy them all. Okay, they could do that, and that'd probably keep houses propped up. But if they give a free market, those houses are coming down. And if they do come out with 1% mortgage rates for everybody, well, then gold's going to go to the moon, right? So even in real terms, your house will will be dropping a lot, right? But in nominal terms, maybe they can keep it propped up here. I'm not sure if they can. Maybe that's their plan. Maybe we'll see how that plays out for them. But I think if they let the free market go, you're going to get houses coming down 40, 50%, and you're going to get gold doubling. That's just my take. That's just the way I see it. You see, gold can smell that inflation. It knows that inflation isn't dead. The Fed's telling you they won, right? They're claiming victory when they're really waving the white flag. See, they lie to us. They don't tell us the truth, but inflation's not dead, and gold is going to continue to go up higher, and I do believe houses will come down as long as they let the free market play out. Now, of course, everybody knows they're not going to let the free market play out. They're going to print money, maybe lower mortgage rates to 1%, and they'll buy them all. They already own $3 trillion of them. Do you know where houses would be if the Fed sold those $3 trillion in mortgages? Oh my goodness. Oh my goodness. Houses, 50%, no, 80% down that app. Don't worry, they're never going to do that. They're going to continue to buy mortgages. That's what their game is. They want to own the mortgages so when they foreclose on you, they can take your house, then they can become the landlords. That's just the game the Fed's playing right now. But yes, you can have gold going up with houses coming down. We had that happened 2008, 2012. We're going to have it happen again right now. That's my take. Your take may be completely different. That's okay. Now, I listen to people with a lot different takes than me, right? I listen to other, YouTube videos, other podcasts, and a lot of these people, they're saying, hey, we got a soft landing coming, or hey, there's no landing. The Fed did a great job. They kicked inflation's butt, right? There's going to be no landing. We're just going to keep going up here. Now, I don't know what they're seeing, but they're not seeing the same thing as me. They think the Fed has done a great job. I think the Fed's done a horrible job. Why do I say that? Because I've lost 25% of my purchasing power just in the last 3 years, and that's by their own measurements. By my measurements, I've lost 50% of it, but they're doing a terrible job. They're robbing us blind. They're soft landing my ass. They're not going to be a soft landing. I don't think so, but that's my take, right? But okay, so the Fed is not doing a great job. They're stealing from us. Now, I started also a couple videos back, I started telling the story of Mike Malone, right? Now, he's saying that the Fed knows what they're doing. They know exactly what they're doing. He's saying they cannot be this stupid. And I would agree with them. They probably, a couple of them went to school, maybe a couple majored in economics. They can't be this dumb. So I'm going to go with them. Okay, they got to know what they're doing. Now, if they don't know what they're doing, Mike says they should be thrown, out of a job. And if they do know what they're doing, they should be thrown in jail for stealing all of our money. You see, what happens when the Fed prints this money? We're printing 4 or 5 trillion extra every year on top of all the money we're bringing in. And these are the good times. I just saw the headline, economy's booming. Economy's booming. Stop printing the money. Do not print 4 or 5 trillion extra dollars every year, because what does that do? It robs from the poor and gives to the rich. And there's never been a greater divide between the rich and the poor. You can go back to the Great Depression. The divide was never greater. And this divide is going to cause the Great Depression again. I do think we're going into a depression. I think we're already in a recession. I think they'll come out in the next few months once they have to, the election's over. They no longer have to say everything's great. They'll go back and revise everything. Oh, guess what? We've been in a recession. Well, guess what? We're headed to a depression if you continue on the same game plan, right? Which is the printing of money. And they've robbed from us, by their definition, 25%. By my definition, 40%, maybe as high as 50%. What's your personal inflation rate? I mean, do it. Did your car insurance go up any? I don't know. Food going up any? I don't know. In my area it is. My car insurance, almost doubled. My food, it's way up. I mean, my gas, my heating, my house bill keeps going up. Natural gas at a record low, but my utility bill, it's not at a record low by any means. Look, we're being robbed blind. Okay, so we got $36 trillion in debt. We got $120 trillion, throw that on top, unfunded liabilities. We continue to print money like it's not a problem. 4 trillion, 5 trillion. And none of the politicians were talking about this, right? Why? Because there's no answer, right? There's no answer. And so they don't want to bring it to the forefront because they're the ones that caused the problem with no answer. So we're just going to continue on the pace we go until it blows up. And that's the game plan. That really is the game plan. And yes, we should throw these people in jail, elect them to office. All right, let's elect them to office. But they're not doing us any favors by continuing to print money into oblivion. It's destroying the poor, destroying the middle class, stealing my purchasing power that I work hard for, and just giving it to the rich people. I don't like that. Look, if you're rich, this is great for you, right? I mean, if you're rich, all your assets are going up, 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 up. No, this is bad. This is going to end terrible. But this is what they're doing. Look, at most people, most households, over half, 50% of households do not own any stocks or bonds. They don't have the financial assets. So they're just getting crushed under the weight of this inflation, right? I mean, you want to talk about households that own gold? It's way less than 1%. I mean, you'd have to knock on 200 doors to find somebody that has an ounce of gold stored away. I mean, people just aren't buying it, right? Because they don't see what's happening. I come on here and I preach to you. I say you got to protect your purchasing power. You just got to protect it because they're trying to destroy it, right? How do you protect your purchasing power? You do this little quiet revolution that I'm a part of. Every now and then I go into the bank and I pull some cash out. And they always ask those stupid questions. What's the money for, Tall Mike? Well, none of your business, right? It's not their business. So I pull some cash out, right? And I put it into hard assets, the real money. I put it into the gold. I put it into silver. People tell me I've been stupid for doing this, right? I've been stupid for a very long time. I was doing silver at $5, right? Now, don't get me wrong. I started buying silver at 12 and it went down to $5, but I kept stacking because I liked how it looked. It's pretty, right? Okay, and now we're, well, I don't know where we're at, 33, 34, but we're going well north of 100. I'm telling you, I'm stacking right here. I'm a big buyer right here. Cheapest asset on the planet right now. You want to get all you can get your hands on. You want to get the coin of the realm. What's the coin of the realm, Tall Mike? Coin of the realm would be the dimes, the quarters, half dollars, and the dollars, but they got to be before 1964. So you buy the old ones. Why? Because that's when money was in the money. In 1964, we took the money out of the money, right? And we just put in, I don't know what they're made with now, some metal type, I don't know. But anyways, they used to be made with real money, used to be made with silver. Now, to get real money with gold, you got to go back to, well, the 1930s, get some of those coins, right? Where the $20 gold piece, 1 ounce of silver in there, of gold in there, it was $20. That's what gold was back then. It was $20 an ounce. So the real money has held purchasing power over the test of time throughout the course of history. Gold and silver has held your purchasing power. Now, why we leave our purchasing power in these banks? I mean, these banks, in my opinion, they're in trouble. Now, even the FDIC, they come out and they say, what? What do they say? They say there's like 80 banks that are going to go out of business. Okay, could you give us the names of those banks? No, they won't give us the names of those banks. Why won't they give us the names? Because they know they'd have bank runs, right? We go get our money out. Look, you want to wake up Monday morning and someday, and you're going to wake up and you're going to go look at your bank account. It's going to say zeros all across there. What happened? Your bank got seized by the FDIC and it was a bail-in. It wasn't a bailout. Whose money did they bail in? They bailed in your money. Wouldn't it be important to know who these 80 banks are that are going to go under? Look, I can give you some names, but I don't want to start a bank run either. So all I'm saying is only leave as much money in the bank as you're willing to lose, right? As you're willing to lose. Take part in the quiet revolution. Take some of that cash out. Look, some people say, but Mike, I can't afford gold. And maybe you can't. How about an ounce of silver? But Mike, it's at $35 now for an ounce. All right, how about buying a quarter? You can get a quarter, right? A coin of the realm. Get the quarter before 1964. Cost you about $6 or $7. You got $6 or $7. It's still a lot. Okay, get a dime. You know, you can get a dime for $2.50. Put one of those away a week. If you don't have an extra $2.50, you shouldn't be watching this video. You should be going out there looking for work, looking for a job, man. You got to get some real money stored away, right? It's going to do you a lot of good. It's going to protect your purchasing power. And they're stealing it from us. And this is why I don't like the Fed, this soft landing talk, this no land, and the Fed's doing a great job. No, they're common criminals, and they're stealing my money. They're stealing your money, and they're giving it to the rich people, and I'm getting a little tired of it. And I don't think no matter who becomes president in this next election, it's not going to change. This is going to continue on until it blows up. But the smart people are becoming their own bank, right? Become your own bank. You know, what are banks doing? I think they're buying the gold. I think they're buying the silver. Central banks for sure are buying the gold, right? I mean, that's what they're doing. They're getting out of the dollars, Central banks used to have 77% of their reserves were in dollars, down to 58%. What did they do with those dollars? They went and bought gold. What's gold doing? It's going up in the central banks. I would get some. It's just my take. You like this stuff? Give me the thumbs up. Get out there, everybody. Have a great day. We'll talk to you again real soon. Bye-bye now.